So you've stated that your pre-feasibility results just announced at Lawyers Ranch positions Thesis as one of the strongest, value creation stories in the sector. Talk to us about, what the case for that is.
I think what makes us one of the best value creation stories is that it's a number of things really, but the PFS, we use fairly conservative commodity prices at $2,900 gold and 35 silver. And that generated an after-tax NPV of 2.37 billion, a 54.4% IRR, and a very quick 1.1 year payback. Couple that with a very strong mine life at 15 years, where we're producing on average life of mine 187,000 ounces, a very low all-in sustaining costs. I think all of that, coupled with the fact that that's the base case scenario. We've got 5.2 million ounces across the project and the new updated resource, and there's a ton of potential to keep expanding that. So I think the PFS economics plus the upside that we see on the project definitely make this one of the best value creation stories.
Yeah, you mentioned the NPV. If you look at gold as 4,100, it actually jumps quite a bit to about 4.36 billion compared to what it is now at base case, specifically 2.37 billion. But for people who are trying to value Thesis today, how should they think about that range, right? Is it kind of like blue sky potential, or there really is meat to 4,000 gold?
I think, it depends how bullish you are on commodity prices, I guess. A lot of analysts are talking about gold not only staying where it is, but tracking to 4,500, 5,000 by the end of 2026 or even nearer term. And at those prices, they weren't in the presentation, but you'll see them in the report when it comes out. The economics on this project are phenomenal. But I think one of the nice things here is that we have a lot of downside protection. The resource and the reserves are calculated at $2,000 gold. So that's effectively the base case. And, this project still makes money at those prices. So there's a ton of upside, and we're protected on the downside.
Between the PEA that you published in 2024 to this PFS, you've actually increased your process tons, despite removing all inferred resources. And that may suggest that you found a more economic ore within the measured indicated category. What changed in your understanding of the resource between the two studies?
Yeah, not much actually changed. I think we had a very good understanding of the project and the PEA. And really, I think it's commodity prices again that have helped that transition. We lost inferred ounces, but at the same time, with a slightly higher gold price used in the reserve calculation, what it does is basically drop the cutoff grade a little bit, and that pulls in more ounces. And we put a lot of effort in this time to really optimize in the mine sequencing, bringing high grade ounces forward. Those ounces came from Ranch, and we upped the cutoff grade on the underground. So I think a combination of things really improved the economics.
Can you talk to us about how you'll be running your pits at both Lawyers and Ranch as well?
Yeah, it's a combination of open pit and underground on the project, and it's obviously there's a pretty fine balance and understanding how to sequence all of that. Initially, the starter pits come from AGB on the Lawyers project, and at Ranch, that high grade ore is instrumental in helping drive the economics. So Ranch will be mined first over the first 2 or 3 years. The underground comes in year 2. It's a very simple kind of 400-meter decline to access that high grade mineralization that'll happen year pre-construction, and then through year 1 to allow that underground to come in year 2 through 7.
Well, as touched on earlier, your PFS is purely based on the M&I category. You've removed inferred. But what confidence level do you have that the inferred converts? And, what does that tell, or what does that sort of timeline look like as well?
Yeah, there's about 650,000 inferred ounces. They're all still there. I think about a half of them, I would say, are from deep underground at Cliff Creek and Duke's Ridge. And I think it's a fine balance. Those are pretty deep holes to convert those ounces, and I think our money's probably better spent converting inferred ounces on the Ranch project that are right at surface. So that'll be a part of the focus for the 2026 campaign. But also, there's also the optionality to keep drilling new targets, trying to make discoveries. So it's a balance between both, but very much all of those ounces are convertible.
Now, for people who follow Thesis, at least since kind of I've been following last year, you're doing great in terms of stock performance. What more should investors have to look forward to at this point?
I think stay tuned for permitting very soon. We're about to initiate the permitting process, and that is going to give a lot of clarity on the timeline and how we get to production. And it's another one of these key de-risking moments, I think, here. I mean, PFS being a big one, permitting being another, working in hand with our First Nations partners, and working towards the feasibility study, which is probably at the moment targeted for late 2027, and then drill results have still to come out from this year's summer drill program, so stay tuned for those. And next year's exploration program will continue to build on the success of this year.
Remind us when your exploration program is slated to start next year.
It'll probably be in about June.
Okay. All right. So up until that point, when exploration gets started, what we have to look forward to: permitting news, remaining drill results news.
Exactly. Yeah.
Okay, great. Well, thank you very much for being here, Ewan.
No, thanks for having me.
For our viewers who want to learn more about Thesis Gold, you can go to CEO.CA, search TAU, or go to Thesis Gold's website. We'll link that for you guys below. Thanks for watching.